Daimler Truck made its Frankfurt market debut Friday and saw its shares climb. It comes after the vehicle maker's long-awaited spin-off from Daimler AG. The split was announced in February and pitched as a chance to unlock the true value of Daimler Truck. Daimler itself will soon be renamed after its best-known brand, Mercedes-Benz. Ola Kalenius is CEO of the carmaker.
Already in February, when we announced that we intended to take this step, the stock jumped 10%. And with a very robust first price of the truck side today, I think that part of that equation has now been fulfilled. Now it's all about executing our strategies and unlock even more value in these two shares in the years to come.
Daimler Truck is aiming for double-digit profit margins across the business in 2025 and particularly keen to improve European sales. It's now the world's largest commercial vehicle maker by revenue, with North America its strongest market. But the firm's profit margins are smaller than some key rivals like Volvo Trucks. Going forward, Daimler Truck wants to boost sales of zero-emission vehicles to 60% of all sales by 2030.
The world's richest man said he might be ready for a pivot. Tesla CEO Elon Musk tweeted on Thursday that he is, in his words, thinking of leaving his jobs. Instead, he said he would like to become an influencer, which the Twitter-happy CEO is already sort of doing with his flock of nearly 66 million followers. Of course, it's not immediately clear whether he was being serious. After all, back in January, he said over a conference call that he expects to be in the driver's seat at Tesla for, quote, several years. But in addition to helming the electric vehicle maker, Musk also heads the infrastructure firm The Boring Company, the rocket launch service company SpaceX, and brain chip startup Neuralink. He has run afoul of regulators in the past with his erratic behavior on social media. 3 years ago, he tweeted that he was considering taking Tesla private and had secured funding, sending the stock sharply higher. But no deal emerged. The Securities and Exchange Commission then sued him. In a settlement, Tesla agreed to have its lawyers vet Musk's tweets that are financially sensitive. Most recently, he polled his followers to see if he should sell 10% of his Tesla stake. A majority agreed. Securities filings showed on Thursday he sold another batch of shares worth just under $1 billion. He has been selling shares to pay for taxes on the exercise of stock options. Tesla investors sent shares south in early trading Friday.
Moderna has scored a win with its COVID-19 vaccine, but its inability so far to follow that up with another winner has been a sore point for investors. The stock fell on Friday after early data showed its mRNA-based flu vaccine was no better than flu shots already approved. An investor presentation showed antibody levels of Moderna's vaccine were not as robust in older people against all 4 strains of the influenza virus in early clinical trials when compared to Sanofi's Fluzone HD. Friday's sell-off prompted a plea from company executives for investors to wait for more data. The small-scale early-stage study testing the vaccine in 180 subjects is ongoing, and a larger mid-stage study involving 500 participants is fully enrolled. Moderna expects interim results early next year. Following the huge success of mRNA-based vaccines in fighting COVID, drug makers are rushing to tap the technology and develop shots for other diseases, including the flu. Shares of Moderna were down 5% in late Friday trading, but up nearly 150% so far this year.
Stocks on Wall Street advanced on Friday despite hot inflation data. The S&P 500 closed at an all-time high, even as the Labor Department reported that consumer prices surged last month to a nearly 4-decade high. Despite the market gains this week, Phoenix Financial Services chief market analyst Wayne Kaufman said he's concerned about the quality of the recent rally.
Market breadth has not been great. Market action has not been great, especially considering this time of the year.
The Dow rose 0.6%. The S&P 500 added nearly 1%, and the Nasdaq gained 0.7%. On the week, the S&P posted its biggest advance since February as anxieties waned over the Omicron variant. Oracle was the biggest gainer on the S&P, jumping nearly 16%. The enterprise software maker issued a bullish quarterly forecast for its top and bottom lines. Oracle's benefiting from the hybrid work model, which is pushing businesses to boost their spending on cloud technology. Shares of Moderna dropped. Early data showed its flu vaccine, based on the same technology as its COVID vaccines, was no better than shots already available on the market. Broadcom is seeing strong demand for its wireless and radio frequency chips. The company forecasts revenue that was above Wall Street's expectations. The chip maker also announced a $10 billion share buyback program, sending its shares sharply higher. And Tesla shares did a U-turn, gaining over 1%, even though its Twitter-happy CEO Elon Musk tweeted that he is, in his words, thinking of quitting his jobs.
U.S. consumers took another big hit at the cash register in November, with inflation flaring at its fastest annual pace in more than 39 years. Government statistics released Friday showed a broad rise in the Consumer Price Index. In the 12 months through November, consumer prices have surged 6.8%. That's the biggest rise since 1982. Airline fares saw a huge jump last month heading into the holidays after 2 months of falling ticket prices. Transportation costs were high as a whole, and car prices remained elevated last month too. Even though gas prices have started to come down, the pain at the pump was still severe, with gasoline prices rising 6.1% in November. Prices for basic needs like apparel shot up after being flat to lower in September and October, and consumers continued to dig deep when checking out at the supermarket. Mizuho Securities USA Associate U.S. Economist Alex Pele.
But when you look at things like rents and other kind of more durable components of inflation, you can see that the underlying pace of inflation is higher. And this is going to be part of what we're experiencing between all the demand stimulus that was given to the economy over the last year, plus the continuing supply chain issues, that the risk to inflation remains on the upside.
Inflation has become such a problem for the Biden administration that it is weighing down his poll numbers. Biden has tried to lower gasoline prices by releasing oil from the Strategic Petroleum Reserve and unblock the ports where product shipments have led to the supply shortages, driving prices vastly higher for goods. But so far, his efforts have done little to correct the supply-demand imbalance created by the health crisis. The Federal Reserve has promised to do what it can to rein in inflation. Policymakers next week are expected to announce a speeding up of the drawdown of the Fed's massive bond buying program, which could set the stage for the first interest rate increase since 2018 as early as next fall.